Woo! See, I can't even do the high pitch anymore. So good morning, everybody. Welcome to Forex.Today. As currency traders, as foreign exchange traders, as Forex traders, today we're going to look at Euro, US dollar, Great British Pound, Japanese Yen, Swiss franc, maybe South African Rand, maybe Turkish Lira. What about oil, WTI and Brent? What about gold? Yeah, let's do that too. Bitcoin? Yeah, you got it. So let's go. Yeah. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to the Forex. Welcome to the Forex.Today YouTube channel. Please let YouTube know that this is quality content. You do that by clicking the little like button. Now, you might want to wait and make sure it's good content first, but if you've been around for a while, feel free. Also, please subscribe, and also please leave comments on the recordings. All these things tell YouTube this is quality content and that it should be in your life. So good to have you here today. My name is Wayne McDonald. I'm a currency trader. I've been doing this for a couple of decades now, or not quite. I'm not that old, but I'm a little bit old, but yeah, I've been around. I've done a few things. I've made a lot of mistakes. I've done a couple of things right, and I'm willing to share all that with you. So make sure you ask questions, write things down. In fact, when I said leave comments on videos, what I think you should do is document on every recording what you learned when you attended live or what you learned when you watched the recording. Document it in the comments, not for everybody else, for yourself. Because then in the back office of YouTube, you can actually search your comments and like, hey, what was that video where I learned that thing? And then you type in the, boom, pulls it right up. So you're actually just organizing your learning process and formalizing it. So make sure you do that. Also, the sponsor of this community is Traders Way. They're a boutique foreign exchange brokerage, and they would like to have the opportunity to earn your loyalty and respect. So they're starting by bringing these videos into your life every single day. So if you are benefiting, please visit tradersway.com. Start today, in fact, and just sign up for a demo account. Takes less than 30 seconds to go through that process. Then you'll be in the back office. You can download MT4. You can play some practice trades, check out the spreads, check out the swaps, check out everything you need. Right? The execution speed, lightning fast. So once you have all that down and you practice for the next few weeks, months, years, whenever it takes to get your skills to a level where you have confidence, then maybe, just maybe, you'll choose Traders Way as the prime brokerage to your new successful Forex trading business and start to trade real money with Traders Way. So give them an opportunity, tradersway.com. Let's go! Boom! Boom! Okay, I was wondering about the resolution that I'm broadcasting this. This looks like my charts are actually, that's 1920 by 1080, I think. And so I'm broadcasting pretty high resolution. I thought I dumbed it down, but maybe I didn't dumb it down enough. It's hard to tell. I have a very wide screen, but anyway, so I'll put this out. That's a lot bigger than 1920. Cool. Okay. Oh, you see the animals behind me? Yeah, funny. All right, so cool. Where are we? So we've talked recently quite a bit about different types of statistical analysis of scattered plot data, which in this case is price and time, right? Certain prices and time, right? That's what all these little candles are. And using that and looking at the slope of the mean over the time, you get trends. Okay? Cool. So there's just, and what I have drawn in the last, week and a half or so, you have one standard deviation from this mean and two standard deviations from this mean, right? The gray area being one standard deviation, and then the higher lines, two standard deviations. And you could be looking at this longer term trend in the same way. Although you'll note that in regards to this longer bearish downward trend, we are technically, if you want to use or let's say statistically, right? You're statistically overbought in this little zone. So we would assume, as being analysts, that at some point around this 133 area, right, that we would top out. What we don't know is it 134 and down or 133 and down. But what ends up happening is relevant. If we can't get through 133, then that tells us something. And if we get to 134 before topping out, which is up here, okay, both are very possible, then we learn something new. Okay, so what happens tells us important information. So for example, if we can't get through this level, right, you're going to have a different assumption of where we are going. If we do get above that level, so let's say we do this, and then it comes up, well, you can say, well, that's interesting because now we have a higher high. See, right now we do not have a higher high. And that tells us something if we can't make a higher high. Can we have an uptrend without a higher high? No. Okay. Yeah, that might be the case, Mr. Highvolt. Don't get lost in all that. Always remember your bias is the most important thing. And his bias and your bias could be different. It doesn't mean he's right and you're wrong. If your bias and my bias might be different, doesn't mean you're right or I'm wrong, or vice versa. What it means is you have your point of view and you filter everything out that way, okay? So I would actually like to be, and I've been clear on this, right? I want to be bullish on this. I want to. And I'm looking for reasons to be bullish, okay? That's everything. And when you use analysis, like when I look at this and this fails to make a higher high, that's not favorable to my current outlook, if you will. Let me get this down. Right? So never get lost in that, right? The last thing you want is, you feel you're wrong. No, you're not wrong. You've done your research. I know you're not wrong. What's wrong might be the market conditions, right? So anyways. So I'm looking at this, and that's hardcore resistance. We didn't get through the 33. Very predictable. And why is that predictable? Well, we know on this longer trend, so I'm only looking at this, guys, right? I'm only looking at this right now. And what that tells me is when you're up here, okay, you are technically, or statistically, I should say, that's not technical analysis per se. We're actually doing statistical analysis. Because this could be the propensity over time of the on average how many holes a woodpecker pecks per day over time. Okay, yeah, it's just statistical analysis. Okay, and of course Leonardo Fibonacci could probably pick that too. But so all we know is looking at these areas here, statistically speaking, and again, another reason I say either technically speaking or statistically speaking, I don't mean based on our opinion, right? There's a lot of people that come out and say, oh, this is going to go to the sky, or this is going to collapse, or this is going to make a huge, this is going to drop like a huge, those are, these wild and crazy opinions. I don't care about those. I'm just saying, when you do standard statistical analysis, the kind of stuff you learn in 7th grade, okay? This is why you do statistics. All this tells us is looking at that part of the move, which seems to be a longer term trend, statistically, we're overbought. And what the statistics tells us is, in the past, studying just this data, when we're up there or down here, we tend to revert back to the mean. Okay? AKA, it's overbought. So you can anticipate, we don't know, but you can anticipate, especially if you're a bear, to get ready. Get ready, because this ain't funny, right? So would a bear sell this? No, that's dumb. Would a bear sell this? Yeah, that's called a double top. Do you see that? Because we know bears like double tops. That's what a bear was waiting for. Okay? Cool. See? So as a bull, I should probably be a little bit nervous here. I mean, not where I just drew, but let's put it this way. I need to get ready for the next trade. Let's put it that way, if I'm a bull. And I'm going to look at previous levels of interest, okay? So I think if I'm a bull, I'm going to be very interested at 132, but this second drop here really bothers me. So I would have, without hesitation, as a bull, bought this, okay, at 132, right? This area. Very obviously, that's where a bull would buy. They would have had their eyes on the prize well in advance, okay? This would be very clearly the move, and we got it, and now it's failed, and now me no likey. Shane. Thank you, Shane. You too. Okay. Blessings to you, Richard. Okay. Isn't that neat? So now bears have the opportunity if they want. Okay? It's not here's what I'm trying to say in some sort of English. This is very important. Okay? The double top. So I guess I'll highlight this. Because that's not supposed to be there according to a bull. So what a bear is now looking for, because I can read the minds of bears. Can you see this trend here? Okay. They're looking for up, and then they're looking for down. What do you think? Do you think a bear would do that? Sell it at 132.50 and take it down? What do you think? You tell me. There should be bears in this room. Because almost always when I pull people, it's either 50-50 or 66-33. And there's always, right, going to be somebody. Okay. I think a bull would have already bought it right at the London Open if they had the exact price they wanted. So we'll really see. Okay. Another scenario here is this. Okay, so we'll let that play out. So I have about 100 pips here, right? This is all very interesting. Okay. it's unfortunate to bulls to have broken out of this downtrend and not sustain it. So, I I think a bull is really disappointed how it all turned out. Okay? You see how disappointing that is to a bull? You can see what they were thinking. So to break out of this downward move and then drop back into it is very disappointing. Okay? So the most important of all this is you know which one you want. Okay? Now, isn't this cool? So we drew this, I don't know, a couple of days ago, right? A couple of days ago. Isn't it interesting? Right here, statistically speaking, we were exactly 2 standard deviations from the mean. Isn't that interesting? Pretty close to pinpoint accuracy. Risk of brewing. Yeah, well, so let's talk about the fundamentals of all of this. What we don't know is if this drops, is it pound weakness or yen strength? So that's why you want to look at other pairs. If it's a macro move, it's yen strength and all yen pairs are coming down. And that would be things like a trade war between China and the United States. That would do it. Or this is pound weakness because of all kinds of things in Great Britain right now. Okay? So you have to continue your analysis on other yen pairs. Okay? And if you're a bear and you see all yens turning strong, like all yen pairs are falling, not just pound yen, then yeah, you'll fire for effect. You'll take one, and then a different yen pair, then a different yen pair, and a different yen pair. Okay? Instead of making 10 trades on this, I would rather make one short on every yen pair over a course of time. Okay? Yeah, so Brexit could still be in there. I mean, that Bank of England last week was just pathetic. It was a little bit embarrassing, actually. And that's really hard to see. Or it hurt to see, I suppose. It looked like even if they knew what to do, they don't have the guts, let's say, to do it. So I kind of feel bad for the good people of Great Britain. So good luck. Good luck. God save the Queen. God save the Queen. Oh my gosh. So anyways, so now you want to take a look and see what's happening to other yen pairs and see if this is relative strength, meaning it's just simply pound weakness and you don't have that on other pairs, okay? So does this look weak to you? Let's drop into the hour. See, I have to update here. Does that look weak to you? So let me show you how simple price action is. Okay? Okay. We have a low, a high. As soon as you make a higher high, right? What I like to do is this. I take the old high relative to the new high and make a place where I want to buy. Okay? Cool. Then it makes a new higher high. I want you to look left and find the old higher high. Right here. Drag that across. That's the new buy zone. Okay? Now we have a new higher high. What do we want to do? Look left. Now we have a new buy zone. That's it. Now you can do this in multiple methods. I'm using price here. Right? But you can go like individual candles. Okay? So in this case, you can drag your support. Okay? Up, 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 down, down, buy. So somebody bought that. Up, 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 down, down, buy. Up, 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 up. You see how there's always the down, down? Well, after you get a new higher high, here's the current bottom. So now you can say, well, I can drag this up to a new bottom. Okay? But we're up here when you're doing this. Up, 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 okay? down, down, new low, up, up, up. And as soon as you make a new higher high, you move this to the old low. Okay. Now you might move it here, but I prefer a next drop in. Okay, so up, 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 down, down, buy, up, 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 up. So go to this. This is where we were. This is the low at that point, so you move it to the low. Okay, and we were here. Now we're up here, right? Down, down, up. So now you can move this again. Okay, you see how over time you just keep moving it. So you're here, up, 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 up. Okay. Now you're waiting. Here's the down, down, and you just kind of got an up, up, and there's not much. I mean, you could do this. It's kind of the same thing, but whatever. And now you're waiting, right, for the next high. Okay. I probably would have just left it here. Now, okay, and you're waiting for a higher high. Now, notice something. What was right there? See, we hit something like that here. Didn't quite get it here, almost. What's up here? The shadow is telling us, well, I'm not even looking at pivots. It's all kind of the same. I'm not even looking at that. Richard, increasing the number of dollars would weaken the dollar, the Canadian dollar, right? Yeah, this is one standard deviation from here. This deviated from here, this deviated from here, okay? And we're just getting to statistically overbought, okay? Now, last night in the live trading group, we did a deep dive into price action. And I asked people, I said, in a situation like this where all you have is price, do you feel like you're missing something? And so I started with nothing and worked my way in, and I tested a bunch of things over time, different indicators, didn't like them. But little things I tend to have liked. So for example, we can add, where is it on here? We can add a 21 EMA. Okay. That's a 21 EMA on the 1 hour. And you can change this now. I'm going to leave it colored like a 21. But you can pull this out to 55 or 99, for example, and try to mimic what's on other time frames. Okay, so like I'll put that here. It's an 100 EMA. I'll put 99, whatever. But just even that little bit of information sometimes to me is helpful, right? Where it says, you know, if we were trending lower, this would be heading lower and we'd spend the majority of our time below it, right? You notice how the central line here acts very similar? There's sort of an upper bound above it and a lower bound, but also the slope is important, like the slope of an EMA. Well, it's acting very similar as it is a moving average. It's the average price over all these scatter plots over that time period. And of course, you could add more time and it's going to change things, okay? But I'm just measuring it here, right? I think we had it just slightly one in, okay? And then you could also do things like Yeah, let's do this. Okay. Now we have one moving average, two standard deviations from a mean, one standard deviation from a mean, which I just use as kind of one study, and now a pivot point. Okay. Let me update this so there's no pivots. Plot borders, plot pivots, false. Okay, okay. So was this information helpful? Yeah, it's helpful because we had an expectation of how the market would behave, but we had that expectation down here. And we had that expectation down here. Okay? And so one of the things I've taught you guys over the years is like all these indicators are helpful, but you need to know what they're doing and you need to use them or don't use them. So if this central mean represents something similar to this mean, because that's what an exponential moving average is, it's just an exponential mean, which updates faster on more recent data. But you could cancel that out and say, well, I kind of get it. I have a slope here that tells me trend. This is a mean. This is one standard deviation from a mean. This is two standard deviations from a mean. So you actually have quite a bit of information here, all based on price. And then measuring the market, you have overbought and oversold conditions of the market. And the interesting thing is these pivot points are basically measuring one and two standard deviations from the market mean, not necessarily from the price mean. And all you have is two sets of slightly different measurements of pivot points, which is pretty interesting, right? And once you get to know what the stats are telling you, you can't predict the future, but you start to learn not now statistics, but probabilities. Okay? So isn't that interesting? If you combine things, you can say, let me point some things out here. And I will change this to market. Okay. What do we have going on here? Well, with the information we have, bears should take profit. Bulls might want to buy, but that's not necessarily it. But also, right, we're actually using both market and price. Those statistics are telling us they are based on past performance, both on price and market. This is oversold. Okay? That's cool, right? And then you can move to the next and move to the next, move to the next. So what's the next here? Well, once again, you see the distance from here to here tells us statistically, based on what's happened in the past, it's oversold and it has a tendency to revert to the mean. Do you think this is important if you're a bull? Okay. Yeah, well, that's exactly it. If you're a bull, if you're a bull, you're buying an up market, right? Do bulls buy down markets? Only broke ones. Okay, so is this market trending up, yes or no? From what I'm measuring here, this is unequivocally bullish. Without a doubt. Okay. So, in this type of market, we are trying to buy dips. And ideally, we buy when it's oversold. We don't always get that luxury, but that's one way of looking at it. Okay? And now, right, so you're going to eyeball one standard deviation and two standard deviations. Okay? That's how you do it. That's one way. That's using market. That's only market. But this is right now best for bulls because of the simple fact of y equals mx plus b and m equals rise over run. Okay, simple statistics tells you, if you do the math, statistically speaking, not an opinion, this market, based on what I've measured, is bullish. That's it. That actually produces the slope of the mean. Okay? That's what it's doing. Cool. So based on that, this is bullish. Okay? So now you have to use price. Okay? Or you can incorporate price. That's all market-based. Price action says this used to be resistance, so now it'll be support. This used to be resistance, so now it'll be support. This was resistance, right? So maybe down in here, that'll be support. Depends on how you measure it. So now you're trying to decide, are you buying this? Well, you would have already done it. That was my concern. Okay? Like, this would have been boring standard operating procedure to buy this. Because there's no doubt a bull would have bought this at the London Open in that situation. If you didn't do that, you're not a bull. You're just not. Or you weren't there. You missed it. But then, like, there's no doubt. That's 1,000% what needed to get done. So now I have a big question mark. Uh-oh. Okay? This is going to be a problem. So this is why I like other tools, by the way, because we also knew last Friday, if you were a bull, this was the first entry. We also knew the second entry. And we also knew the target. So here's the cool thing. If you are truly a hardcore bull, okay, you bought this, you bought this, you bought this, you bought this, and then what? Out, out, out. Done, done, done. And you walk. Okay? So now I don't know what's going to happen. Ni hao. Yeah, so I don't know what's going to happen now. Those are done. Okay? Like, right? Like, we have all of these areas as exit points, exit points, exit points. Okay? So now, really, what a bull wants is to keep it above this area. This is still live. Okay? But a bull is probably going to want down and either tomorrow or Friday produce a new up. What do you think? So now I can even simplify this further if you want. Watch this. Unfortunately, we're going to lose the standard deviation stuff. No, maybe I can do it. Hang on. So let's go to indicator list. Let's kill that. Let's put in my pivot points. Insert, indicator, custom, biased pivots. And we're going to put this back on weekly. And we got it on bullish mode. And do you want conservative as well? Hang on, does this version have it? I might have the old version here. I have to update Well, maybe it'll point it. Solid, solid, true, true, true. Everything's true. So if I have the right version here, it's going to plot both conservative and aggressive targets. Yeah, cool. So I filtered everything out now. This is only for bulls. If you're a bear, you would never have the tools set up like this. This is why I love my bias pivots, because you have to have a bias. You don't have a bias, you're not a trader. You don't get it. You're not on the clue train. Okay? So here's the interesting thing. This is plotting things for us. I took out everything that a bear would look at because we're not bears, we're bulls. And bulls, it says here, right? Notice this period here. On this day, at this time, I'm trying to make that vertical. Hello. Let's do it this way. Maybe I'll use an arrow. At this moment in time, la 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 la. You know what we said? And I'll do. Anyways, and that moment in time, we said this is where you should buy. Nice. Isn't that cool? Okay. So it's cool. So you had to wait for the down, 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 buy. Look, bullish buying zone. Very cool. Okay. So look, check this out. Up, 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 up. And it says right here, see it? 70.79 and a half. Exit. All right, cool. Thank you. Then it says here, look, buy. Exit. Nice. And what's it saying now? Oh, on Monday, you might want to buy down in here. But it's Wednesday, and we know that we want to buy between 71.24 and 70, whatever that is, 90. And I manually highlighted this, but it automatically did it. And now my trade plan, right? So these are old, dead, dead, dead. Who cares? Who cares? Well, Wayne, predict the future. Wayne, show the whatever. This is the future. Okay? If that doesn't happen, we're going to do something like this. And what does that create? The bears will get their chance. Bulls will be done. Bulls milked this market for all it's worth. But right now, on this time frame, with this analysis, we're a buyer at 71. Drop the mic, I'm out. See you guys, thanks for coming. Make sure you click the like button. That'd just be great. And you're like, what's he, doesn't he have another 45 minutes to go? Okay? So another way of saying it is, even if you're a bear, you need to be very careful. You might scalp your way down, but you got a lot of, right? You got a lot of people that are going to challenge you. I'm not saying that you can't be a bear. What I'm saying is, this is probably not one you want to be bearish on. You're probably better off going back to this pig and seeing what's happened, because this one's already double topped. So if the pig drops, it doesn't mean the Aussie will drop, but, you know, Aussie's been more bullish. So look at this trend over time. So we had it on a 1 hour chart, right? The overall trend is down, right? The long-term trend is down. The medium-term trend is up. So if the downtrend is going to hold, right? Think of everything as an if-then statement. If this downward trend, and let me just highlight this to make sure everyone's on the clue train. Beep, 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 beep. Okay, this is the long-term trend. If that's going to continue, remember, every trend dies. Okay? Trend is your friend until you turn your back and it stabs you, right? All right. So if this is going to continue, statistically speaking, it has to come down. Okay? And a double top is really good for that. Cool, right on. That's how it happens. That would be the birth of the resumption of the downtrend. And this is your, Elliott wave, three-wave correction nonsense. Okay, great. But does that mean you sell Aussie? Not today, but maybe you're beast. Okay? So this is great right now for bears and very less ideal for bulls. So bears are thinking about it. Okay? But how about this? If you're a bull, would you buy down here? See, we're not interested now. This should have been planned out earlier by you. Okay, we're talking about your next move, not your current move. So if you're a bull, that's what you believe in. Which one's right? They're both right, statistically. Jim, you can remove some of those. Like, I agree with you, there's too much. You can remove some of them. Just plot London, New York, you're done. Get rid of Pacific. You can go Asia, London, New York. Get rid of Pacific. You can do that. Okay? So, statistically speaking, guys, if you're a bull, this area, I'm struggling, I'm running out of colors here. I'll go gross orange. You see this? One standard deviation from the upward sloping mean. So in the future, you might think about in here. This area here, probably in the future. Okay? So a bull has a second chance. I hate those, but that's what that could do. More likely down in here. Okay? And if you're not a bull, then you're not looking at that. Bears are going to sell here, then they're going to sell here, then they're going to sell here, and work their way down to 2 standard deviations at the bottom of this channel. This, right? So now you got to go to yet another color. Let's do this pinkish. Okay? This is where bears are trying to go. This would be oversold on the longer term trend. So bears are, right? So the thing is that what you believe in? Well, you can be right. Or do you believe in this? That is also right. Many people, what they're trying to do is both, and that's where they fail. Because what will happen is you'll get into both those trades and probably a couple other ones that don't exist because, right? If you don't stand for something, you'll fall for anything. So a bull knows what to do. They're going to give it one more shot here and defend themselves in New York. And if that fails, they take a walk. They're like, that's it, I'm out. And they're not going to be interested again until we get to this level. So they're like done for the day, maybe pick it up tomorrow. Okay? And then they're eyeballing their second trade is going to be somewhere in this zone. Right? So this is what a bull's going to do. Why? They're bulls. They're going to try here on the short term, meaning New York. Or they're going to try again tomorrow or Friday, somewhere in here, and they're going to go that north. Super ridiculously easy. If you know what team you're on. If you don't believe in that, all that's noise, and you're like, here's what you're doing. You're selling at the top 2 standard deviations from a longer term mean. Done. You're done. You got your double top. Oh my God. You're just like, this is so stupid. Right? Taking pips from a baby. But if you don't make a stand for something, if you're not a bull, you're not a bear, you're confused, you're a pig, pigs get slaughtered. And what does that look like? I'm not going to put it on because I have good hair today. This is what pigs look like. Okay? Slaughtered. Rah! Rah! Right? How about this for a pig noise? All right? Cool, right? So, you're either a bull or a bear? That's it. Okay? What do you think? You understand? Simplify, 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 simplify. Dude, the course is 80% off, dude. All right. Okay? All you have to do is make a decision. And I swear to you, if you flip a coin and say for the next 6 months you're either a bull on the pound yen or a bear on a pound yen, you're done. You're going to be better. The thing is, if you are a bear, you know what you're looking for. You sell in bearish conditions when you're making lower highs, lower lows. Lower highs, lower lows. Lower highs, lower lows. You can now predict the future over and over and over again. So when you're down here, you're like, yeah, I'm going to sell this. When you're down here, you're like, yeah, I'm going to sell this. When you're down here, you're going to say, yeah, I'm going to sell this. You're like, well, Wayne, how do you know when to sell? Well, I just showed you like 158,000 times. Oh, when you have a lower low, drag this across. That's where, right? And then when you have a new lower low, drag that across. There's a new area. When you have a new lower low, drag this across. And in the future, that's going to be your area. So when it gets up here, sell it, dude. Sell it. Sell it. What's wrong with you? Sell it. Okay? Simplify. And then if it does this, stop selling. Walk away. It's no longer making lower highs and lower lows. So you're done. Walk away. Stop it. Stop it. Oh, but I have to be on every trade, Wayne. Otherwise I won't. Come on, dude. Okay? So if you just flipped a coin and sold in bearish markets if you were a bear, or you flipped a coin and said, bullish, good. Only buy dips in an uptrend. You'll be successful. You'll make money at the end of the year. Done. Just do that. The problem is you may not even be willing to flip a coin. Oh, I can't do that. Oh, Wayne, that's stupid. Oh, Wayne, no. But you don't listen. Okay? You got to be coachable. I'm telling you. You either sell in a down market or you buy in an up market. And statistically speaking, you have to make money. Okay? So if you believe this is bearish, that's cool. I get it. I know it's good. My rhymes are tight. Okay? So you're looking at this and you're like, oh, I want this to be fatter. Cool. Let's do it this way. When you, son of a, I wish I could do that better. Let's do it this way. Okay. If you only sold near those pink lines, or if only bought at those green lines, you'd be profitable. Okay? Notice, however, and this is another sort of probably scab, right? I have 1,000 lashes for sure. So we all have scabs, I think, right? Some of them are still festering. Here's the thing. These are 4-hour candles. How many people here tend to lose 20, 30, 40, 50 pips inside of one of those candles? Like over the course of 4 hours, you lose 50 or 60 pips. How many people are willing to admit to that? Indonesia, I love Indonesia. So no one's willing to admit that they could lose 50 or 60 pips inside of one 4-hour candle? How would you like to have bought and sold in that candle right there, inside that one little candle? Okay? But here's the thing. What was the real trade? What's the big boy and big girl trade? They were in it for 4 days, not 4 hours. And the difference is they had a very basic plan. They did a very basic level of resistance. So like last night in the live trading group, we studied this pound yen for 2.5 hours. And again, I'll go back. I said, do you feel like, do you miss any indicator? Is there something else you could add? Because we were looking at naked charts. And we're like, oh, well, if you follow this candle, and if you follow that candle, and if you look at this candle, and if you look at that candle, okay, great. And then you'd move this stop and move that stop. Okay, great. All of it's good. All of it's legit. But I said, do you guys miss any indicator? And here's what I'm thinking. Yeah, sell this. You're done for the month. Done. Like, that's it. There's your M3. Boom. 2 standard deviation from a mean, a bullish exit point on a weekly basis, and the exact monthly pivot you want to sell. Done. You were done. You were done in like 4.5 minutes. You were done for the entire month. Oh, but what about this candle? And what about that candle? And what about... dude. Right? So find out what you like and use it. Okay? If you don't like pivot points, don't use pivot points. I love pivot points. So I've been telling you for like 20 years, there's 2 things you need to master. Pivot points, price action. Done. If you, right? But moving averages help you with price action. That's cool. They're helpful. Oscillators help you with price action. Problem is, most people don't know what oscillators actually do. They don't understand the math. So they put some sort of magical powers on top of their oscillator, like their MACD or their Stokes, but they don't understand what they do. So they're kind of like magical crystal ball kind of stuff. And you're like, no. Well, they're helpful to tell you overbought and oversold conditions because this will roll over and point downward because you're no longer making higher highs and you're attempting to make a higher low. But we already know this is bearish. We already know this. Dude, of course it's bearish. Okay? Of course it's bearish. Okay? Yeah, Luis, well, if that's true, this will come down. But the thing is, we already know, we already have an if-then statement. If bears are going to take over, this is the exact thing they would do. Okay, you don't have to be a rocket surgeon. If it busts higher, and this is what I started out with earlier today, if it does go higher, that is very important information. What is likely to happen, or what will probably happen, is this. Between now and Sunday afternoon. Okay? And if we do, let's say next week, head up here, statistically speaking, not opinionated, but statistically speaking, that's incredibly important because the downtrend is dead. Okay. Also, what I opened up with today was bulls would absolutely 1,000% buy here at London. Bulls. If there are bulls, they would absolutely, unequivocally buy there, which means we're supposed to be up here right now, or let's say by the end of New York. And those dreams and hopes just got crushed. Why? Well, This may not be the right pair. That Aussie might be a better pair. That could be it. There is more bears waiting to sell. Or bulls have made so much money since the bottom of this move, they've decided to take profit. Why? Because statistically speaking, this is 2 standard deviations from this sloped mean. And this is statistically 2 standard deviations from this sloped mean. So a buyer would buy here and exit there for the full Monty. Like, they wouldn't expect any more pips. Statistically speaking, this represents 95% of all probability. If you bought there and exited there, you got an A. Remember, there's no A pluses in Harvard. Okay? So if you held on a little here, whatever. Nobody cares. From here to here, statistically speaking, represents 95% of all expected prices in the scattered plot. Anything beyond that is an outlier and is not actually really counted. Because it's so improbable. Okay? Okay? So we need to know, and what we don't know, but what we need to know is this move here, the shorter term move, relevant at all? Oops. Okay. And of course the other one. Is it relevant at all? Or are we just doing this? See, now you're making decisions based on all kinds of things. Maybe your interpretation of the stock market. That'll have an impact on this move. Okay? A bull's going to buy this next week, but a bear's taking it all the way downtown. Okay? You get paid from clients because you have done the analysis, interpreted the data, and made a decision they're unwilling or incapable of making themselves. And they pay you because that is valuable to them. You understand? I want to be a bull. I want to be a bull. Okay? I want to be a bull. I want to be a bull. So that means I know where I want to buy and I know when I'm wrong. The most important information you can observe on a chart is to know when you're wrong. If you have a trade plan, you should never be surprised you're right. Of course you're right. That's your job. You walk into a factory, punch in a time card, and then you go over to a machine. You put your left hand here, you put your right hand here, you pull down, it goes, and then you lift it up. And you're like, oh, look. You make doors for a Subaru in a Subaru factory, and you're like, look, another perfect door. And the machine takes the door away, and then another piece of aluminum shows up, or stainless steel, or whatever it is, and puts it in the press. And then you go left hand, right hand, you pull down, and it goes, and you lift it up, and you're like, oh, another door. But after a while, you don't get surprised that it made another perfect door. The only interesting thing is when something goes wrong, you're like, oh, that's a mistake. And you red flag that. Okay? Baby, generally you're measuring a trend. Okay. But you can't be wrong because you're just measuring a scatter plot of data. So you can measure anything and you'll always be right. It'll always tell you the trend of what you've measured. Okay. So like, you know, I obviously what I've done here is I'm no longer interested in this, and I'm no longer interested in this, but I know, right, a lower high should create a lower low, so I'm now just paying attention to this, and it will last forever until it breaks. So my thing, I would rather be a bull. I understand this is falling, but I'm also looking for the most relevant piece of information. It's not that it's trending down, it's that it's no longer trending down. Okay? And in a scenario where we change directions, bears that are not keeping up will give back half of what they made in this channel, and then they'll sell, and they'll give at least half of that back. Meanwhile, I'm just wait, buy it. Okay, but whatever. One of the things that I'm interpreting in this and other yen pairs, again, this is probably the last one you'll buy and the first one you'll sell, but whatever. In here, we have two Fed things. Okay? We have a TV interview and we have meeting minutes. Okay? Those are two bullet points. And those things have made me fundamentally bullish on the US dollar. Well, fundamentally bearish on the US dollar, fundamentally bearish on the Japanese yen. Okay? So I would look at this and say, is this a good opportunity to buy? Well, maybe down here it was, and maybe down here it was. And if we get a pullback and extension, yeah, okay. But I'd probably rather buy euro over pound, and almost certainly Aussie over euro. You see it? So this is where you do your analysis. You don't look at your charts to make decisions. It's so silly. You already know. Okay? You already know. So I have two pieces of information that tell me I want to sell the USD. I want to sell the Japanese yen. And I might even be interested in selling the Swiss franc. I'm open-minded to it. But I'm going to sell dollar first, then yen, and then maybe if I have too many trades open, then I'll get some Swissy on and all that kind of stuff. And once I get too many Swissy on, I'll double back to the dollar and see if I can capture a couple more. Okay? Now, so if I get it right, I'm going to be really right. And all of this is based on fundamentals. But that doesn't tell me that I'm right. But when someone like George Soros only looks at fundies and makes more money than God, decade after decade, and never looked at a chart, there might be something to fundamentals. It's so funny when people come in and like, it's all about price, there's nothing about fundamentals and blah. Dude, seriously. There are people that have made more money than God for decades and they never looked at a chart. Now, I'm not saying that's right. What I'm saying is there's real logic and information and intelligence in the fundies. Okay? So I start with my fundies. Like what Jerome Powell said in that TV interview a week and a half ago and what the Fed meeting minutes said about a week ago. Based on that, I have an outlook for dollar weakness, Japanese weakness. Does that mean I just start buying pound yen? No. Why would I buy pound yen like that? Like I could tiptoe in, but I now use technicals. And with technicals, I can say, oh, right, well, there's a lot of downward pressure here. I get it. Oh, my gourd. That's not going to be an easy fight. I wonder what Aussie's doing. I wonder what Kiwi's doing. I wonder what CAD's doing. I wonder what Euro's doing. And I start analyzing, and some of them might be slightly like this, and some might be already be like this, and others are kind of flat. And I'm using technical analysis to say, well, If I'm going to buy a pound yen, a CAD yen, a euro yen, an Aussie yen, a Kiwi yen, something yen, Noki yen, if I'm going to buy one of those, which one should I do? Which one is most favorable? Which one has market conditions favorable to my strategy? I don't care about what MACD tells me unless I say, MACD, tell me something. Okay? And it'll say that. Okay, that might be good. But I'm not looking to it to tell me decisions, right? So I'll say, look, I really want stuff like this. Do you understand that I will fire for effect on a breakout? But I also know that that's probably not the first one, because statistically speaking, this is still in play, and I think a bear is going to give it a shot. I think on the long run, they're wrong, but on the short run, they're probably right. So I look at that and I'm like, okay, I don't like that one, but what about the Aussie? Well, I'm a little more comfortable with this one because it's not pointing straight down. Okay? But if it did do something like this over the next, 5 days or something, holy schnicker-schnacker, watch me take a walk. Adios, muchacho. You want to play with that? You can have it. I'm out. I'll see you in a week. And I'll go get sunburns on the other half of my feet from kayaking. Half my feet are sunburned and the other half are pale white. So I'll have to kayak the other way around the lake next time. Okay? But you see how you're the boss? You don't bounce around the market right? You don't bounce around the market. Okay? You don't bounce around the market. Look at this, guys. You lose money inside these tiny little pissy little candles. This is where you lose money, is inside of one little candle. You got to change, brother. Look it. Oh, you missed this one? Don't worry, it came back. What's your target? Down here. Oh, you missed that one? Don't worry, it came back. Look, you get tons of opportunities. La-di-da-di-da, la-di-da-di-da. You got 16 hours, 24 hours to get these trades and sit on them. Now you're not scalping. You got tons of time to get into these trades. Tons and tons of time. Ridiculous amounts of time. There's no such thing as fear of missing out. Dude, you got a half a day to a whole day to enter these trades. Okay? And should I be worried? Look at this, my line. We knew this, guys, on Sunday. We knew this right here. This line that says pivot target conservative was drawn right here on that candle. Actually, I'm wrong. Am I wrong? I am wrong. It's no. We knew that here, actually. But this would have adjusted, of course. So you certainly knew it here. But right? So here it is Wednesday. I'm already looking at next week's buy zone and next week's target. You see that? So it's Wednesday, and I already know this. I knew this on Monday. So we actually knew this target here. We knew down here. And the interesting thing is, of course, that's the bottom of the range. That's one standard deviation, or 2 standard deviations below the mean, and now we're up here, right? In this area. So we actually knew that 10 days ago, 10 calendar days ago. Now, it wouldn't have been accurate yet because it moves as, it adjusts as price does its thing, but it sure gives you a clue train. So another way of looking at it if you agree with all of this, okay, if we go lower than that, that's not going to be favorable to bulls. And we know they have one other plan up their sleeves because I've already explained it. Okay, what would a bull do and why? Well, first of all, they're looking at this area. So wouldn't that be cool if you hit that on Monday? And then you got this other one. So let me predict the future one more time in case you missed it. Never hurts to be repetitive. Okay, it's going to bounce off the mean and go straight up, or it's going to drop down to somewhere between 1 and 2 standard deviations below the mean and then go straight up. That's what a bull is going to think. Will one of those things happen? Well, if they don't do these things, it's very informative. Okay? And if you're down here next week, you're not a bull anymore. Well, you are still a bull. You're just not in the market anymore. Maybe, David. Maybe. Well, Gary says I tried swings on the cross pairs last Friday and got too confusing. Yeah, sticking to the fundies. Well, that's the thing. Like, cross pairs are relative strength, not global macro per se. Okay, so if you're trading pound Noki, you are now trading one country's economics versus another country's economics. That's not what I'm doing with Aussie yen. With Aussie yen, I'm trading global macro, which I'm trading the entire global economic situation. I don't really care about Great Britain in that trade. I don't really care about Norway in that trade. It's all incorporated into it. This also, global macro outlook would tell me, would this be favorable to oil? And maybe gives me an idea of what this one should be doing. Okay? But other than that, you're just like, is pound strong today? Is Kiwi weak today? And I did that for years, doing relative strength. And I found it to be a bit inconsistent because it's so backward looking. Where macroeconomic is all forward looking. I'm not interested in today. I'm interested in tomorrow, next week, next month, next quarter, the end of the year, next year. It's all forward looking. Okay? So if you're trading this down right now, first of all, you're foolish. Second of all, you're probably playing a China-US trade war. That's perfectly correct. But why would you be selling the one that is trending up? Why don't you pick the one that's trending down and sell that one first? Okay, so now I'm twisting in a bit of relative strength after the fact. After I've made my macro decision, in that case, risk off, buy Japanese yen, buy dollar. And then I would go through relative strength and say, well, the last one I want to sell is Aussie, but that pound yen looks really good. And you see, like, it's the same. Everything is the same, just in mirror reverse. You've analyzed everything, came to a decision, you're risk off, you're buying yens, you're buying dollars, you're probably buying Swiss francs, and now your strategy is done. Now you open up charts and say, well, which ones have bearish markets? And you're like, oh, look at that pound yen. And you dump that one first. Then you look at Aussie yen and you're like, should you sell this? You're like, hell no, not yet. Not yet. Not yet. And now you're doing your job. So I don't care if you're risk on or risk off. If you're risk on for like a COVID-19 recovery, great. I know what you're doing. I know what you're thinking. I know which one you should be buying and all this kind of stuff. But if you're like, whoa, there's going to be another big dip and there's going to be another wave of sickness and there's going to be a trade war and I'm risk off, I'm like, I totally get you. Totally understand. I don't even disagree with you. I might be a bull, you might be a bear. And I totally understand your point of view. I don't know the future, so I'm like, well, if they're right, it's going to be because of those things. But if I'm right, it's going to be because of my things. So we don't know what the future is, but if you know what you're going to do, right? I might be long Aussie yen, you might be short pound yen, and we both end up with mediocre trades, but we're not going to like lose tons of money. Right? And then as the economics play out, it might appear that you're more right than me, and I should like scale back on my trading because I'm not getting good setups. Meanwhile, you're crushing all the weak pairs. And then eventually, if you're totally right, and there is a second wave of pandemic, then all the yen pairs are coming down and I'm backing the heck out. I might be scalping on the way down trying to make up for lost ground, but I'm not swinging up in a downtrend. That would be foolish. Okay? So we're talking last night, if Ryan is bearish on the pound yen, he had plenty of things to do lately. And if I'm bullish Aussie yen, and I have tons of things to be doing, and we probably both made money. The thing is, you need to know what team you're on. He traded pound yen, of course he's bearish. It's pound yen. Have you seen it? And I'm bullish. Like, of course I'm bullish. Look at it. What else would I be? Right? And then I hope you decide that you want to learn how to do proper analysis. So when you're in this period, you don't lose 100 pips and have a pissy week. You're like, what did you do all week? Oh, I was up for a while and then I gave it all back. Well, dude, come on, seriously. You lost all your money in this? That's where you lost your money? We need to refine some of your rough edges. Okay? Because all there truly is this if you're a bear, and that's dangerous, and this if you're a bull. Okay? And that's that. And if you had like 3 or 4 or 5 trades in here and they all lost, I don't think you know what you're doing. And we can fix that. That's a cool thing. It's just knowledge. Here you go. Neat, right? Is anyone going to make a change in their behavior, or was this just entertaining? Pound CAD, not interested. Thank you. Okay, I just explained the difference between macroeconomics and relative strength, and I'm a macro trader, and then you just throw pound CAD up there? Not interested. Sorry, I don't do that. Okay. I'm a macro trend trader. I don't do that. Okay. Cool. Now take all of that and refine it. Simplify it. Never allow it to be complicated. No, that's all right, dude. I bet I'm making a point, Junior. That's all. But don't worry about it. I'm not mad at you. No harm, man. Okay? Okay? Simplify it. Simplify it. Simplify it. I won't do silver, but we can do gold. By the way, you see the difference here? Let's do 4 hour and 4 hour. Well, I guess they're all looking bullish. So, I want even pound to go up. I want everything to go up. I love it when everyone gets rich. Do you know if you bought Delta Airlines like last week, you'd be up 30% right now? It's just, money's just raining out of the sky. Okay? All right. How many times have I told you that euro dollar is going to go up simply because of the US dollar? Nothing, and no reason out of euro. It has nothing to do with the ECB. And this thing's going to go up. Look at that. Just boom, boom, boom. Just awesome stuff. Cool. So gold, huh? Okay. You are not alone. Do 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 do. Do 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 do. Alone, alone. All right, so tell me, what do you want to do? Who asked about gold? Johnny. What do you want me to do, Johnny? Yeah, well, Gary, of course the analysis works, but the thing is, you're over complicating, and you get ebb and flow. You're right for a while, and then you're wrong for a while, and then you're right. Where if I can get, let's say, 25 or 30 trades open of basically the same macro trade. So I'm long Aussie, then I'm long CAD, then I'm long Kiwi, then I'm long Noki, then I'm long Euro, then I'm long Pound, right? And then I switch over from the yens, and then I'm like, I'm long Euro Dollar, and then I'm long or short USD CAD, and then I'm long Aussie Dollar, and then I'm long Kiwi Dollar, and then I switch over to the Swissy pairs and all this kind of stuff. Like, you don't need the other stuff, especially if they perform less consistently. What'll happen is you'll just have higher volatility in your results, and that's not good. After a while, you just don't even need it. You just look at it like a pound CAD trade. Just it's so pissy. You're just like, eh. Unless your strategy is isolated on the pound. Okay, so now if you are isolated on the pound and you're an expert on the pound and you see pound weakness and that's your strategy, that's more, instead of global macro, that's sort of like pound macro, but that's your specialty. And you're like, okay, the pound is coming down, right? The pound is going to be weak between now and infinity. Okay, so cool. So you're going to sell the pound versus everything. Now, so if CAD is appreciating on increased global demand for energy and other commodities, and Canada's benefiting from this and an economic recovery, oh, and you're already selling off the pound, then by all means. But what I think is sometimes you guys are like short pound CAD, and then tomorrow you're long Kiwi Aussie, and then the next day, it's, Kiwi or whatever. You're just every day it's something different. That is not going to lead to the results you want. Now, you might be profitable, but I don't think it's going to result in the results that you hope for. Because in of itself, it's an inconsistent strategy. Okay? Cool. So, okay. So, first of all, let me change this. We're definitely not in a bullish mode. So this is a bearish world. Okay. And at some point, we're going to slam into this purple area, and it's going to stop falling. Okay. How do I know that? Because I look at it and it says it's support. Okay. So if you were a very, very aggressive bull, you'd let this stretch out like an Arctic turtle, hit way down in here, and every bear made too much money too fast, and they're going to exit, which means if you're a scalper, you're going to scalp it long off there if this stretches out. So imagine this candle now is twice as long. Okay? What would you do if you just made a ton of money over the course of 4 hours? Since the London Open, This just dropped like a ton of bricks and you're sitting on a big pile of cash. What are you going to do here when you hit support? Exit. So a scalp now, a scalper is going to try to take it north. And eventually, if they get it right, they'll have, if you're a scalper, oh, I don't know, 30 or 40 trades on their way up to this point. If you're a scalper. Okay? And how do I know all this? Do you consider this support? It's a yes or no question. If you see it as support, it's going to hold. That's why it's support. If you're wrong, of course, then you're wrong and it's not support. And then you need to figure out why you were wrong. Okay? So imagine this down. And then a failure to make a lower low, failure to make a lower low, failure to make a lower low. So this will be 99% oversold and flat. And then suddenly a higher low slightly and not a lower low, and a higher high slightly and no higher low, and a higher high slightly and no higher low. Well, the fact that it's not making lower lows and it's making higher highs, well, the way the math works would pull it back into the trade. Okay. What needs to happen to get this oscillator to move up? By the way, let's go through this. This is a buy. This is not a buy. This is a buy. This is a pretty pissy buy. This is not a buy. This is not a buy. This is not a buy. This might be a buy. So you have to know how to use your oscillators. This is a sell. This is a sell. This is not a sell. This is not a sell. This is a sell. This is a sell. This is not a sell. This is not a sell. Easy, man. Easy. When everybody's trying to please me, baby. All right, I'm spent. So thank you for being here today. Thank you for being part of Forex.Today. Please subscribe, please like, please leave comments. And I'm pretty sure I'm going to release the new upgrades to MetaTraders. So if you're a customer of MetaTraders, get ready. You got 2 new freebies on the way. The programmers think it's done, so I'm going to do some testing and some updating and all that kind of stuff, and hopefully launch that. So don't worry, you don't have to pay more money or anything like that. I'll take care of you because you're my sweet baby and I love you. So look for that email maybe today, maybe tomorrow. I'm doing my best. And of course, if you're in my live group, we'll see you tonight for step by step price action using recent candles. Cool. So peace on earth. May the pips be with you. May your profits be above average. And thank you, Traders Way. Come on, guys. Visit Traders Way. Open that demo account. You're morally obligated. Don't embarrass your mother. Pay it back. They're doing something good for you. Have some common courtesy. Visit tradersway.com and open a demo account. And then open your heart so they have an opportunity